Now, investors being confident that a resilient US economy will keep propping up the US markets. However, that confidence has begun to unravel. Weak job growth data and Trump's latest volley of tariffs has rattled the investors. The biggest US job revision since 2020 exposed the pitfall of economic data. The latest employment report shows the steepest downward revision to US jobs growth since the pandemic. And the revised data has reflected a dramatically different picture of the jobs market in recent months. Now, Trump fired Erica McIntyre, the commissioner of the Bureau of Labor Statistics, just hours after the revisions were revealed. The president accused the commissioner of politicizing the data without any evidence, and that shattered a 3-month stretch of nearly unbroken market calm. The traders rushed into the safety of government bonds, pushing yields to mark the biggest one-day drop since December 2023. Neil Datta, the head of economics at Renaissance Macro Research, has said that the US public statistics represent the gold standard. Calling them into question because they tell you something you do not like undercuts market confidence. Now, investors have also ramped up bets for a rate cut next month. Separately, reports have shown Fed Governor Adriana Kugler will be stepping down from her position on the central bank's board, and that will give Trump a sooner than anticipated opportunity to install a new policymaker who aligns with his vision for rates. Now, Trump also called for Powell to resign, just like Kugler. The dollar fell and the S&P 500 index has continued its retreat from an all-time high, hitting its worst week since the month of May. The tech-heavy Nasdaq index marked its biggest one-day percentage drop since the 21st of April. And Friday's pullback of over $1 trillion in stocks has marked the sharp reversal for markets that had raced to record highs before the latest fall. And Wall Street had rallied over $15 trillion since the April lows. The stocks were hit by Amazon's uninspiring outlook. Amazon's shares tumbled by 8.3% after the company failed to meet with the lofty expectations for its web services and cloud computing unit. With stock valuations being elevated, traders are now confronting a harsher backdrop. There's also renewed debate over how quickly the Fed might be forced to cut rates. The selling pressure has also intensified as Trump has raised his rhetoric on Russia.